Hi, welcome to the Market Alert for Thursday, the 8th of December 2020. So bonds and bullion jump, big tech and the dollar slump, black gold dumps, the recession risk rising fast. So the market was choppy yesterday, risk subdued, and Haven's bid on Putin threat and soft labour costs. Talk about Putin in a bit more detail in a moment, or the statement. And US stocks were subdued amid disinflationary data and Russian President Putin's nuclear rhetoric. Again, we'll come to that when we look at the German DAX. And economic news today, we got the RICS. I've added the low impact news items in just to see if there is anything that we're missing, because there have been the odd move that has come into the market, and then you have a look at the low impact, and it used to be a high impact, and then it's moved the markets still. We've got Lagarde speaking at midday, unemployment claims at 1:30, and then 3:30 natural gas storage. And that's it on the news front. Like I said at the start of the week, it's a quiet week. Gold silver ratio still down at the 78 level. So let's have a look at the stock markets, kicking off with the Dow from yesterday. So in the Dow yesterday, we've got a narrow range, the market finding support at the 78% retracement as well, and you can see overnight markets also bouncing off this area as well. So let's have a look at a bit more detail, but just before we do that, note the volume here is higher than the previous day's down day, and the market hasn't sold off, so there was some buying during yesterday to support the market at this level. In the 30-minute chart, you can see that we had a choppy session yesterday. Market down in the European markets, Dow down also in the futures. The market then rallying up in the open of the Dow, then sold off all the way back, and then found resistance at the Dow when we had another bounce back to the upside, and then just moved and meandered down. And overnight the market sees buying down at, guess where, just above the low, and the market brought back towards the DP at the moment in the 50 EMA. In the German DAX, we also have demand at this level here. Let me just draw the fibs back in on this chart. So from the line to the left up to the recent high, you'll see that again we're in that sort of 78% area. So let me just expand this out a bit so we can see this a bit more clearly. We came through 38.50, 62, and again you see that 78, just as we've seen in the Dow. Here we've got the demand, and we're getting towards oversold as well. The market's back up on the overnight after gapping lower. Let me show you this. Market gapped, and the gap has now been filled, as you'll see over to the left here, heading back. Where did the market trade down to? The low and the S1. It's oversold in the 30-minute chart and come back. It's now overbought, and the market is obviously trying to get to the 50 EMA, the close, or the DP, and will probably attempt to do this during the futures open at 7 a.m. In the 5-minute chart, you can see that gap a bit more clearly here. Market down. You can see all of the increase in volume at the low and the S1, and the market being brought back there. It's stuck at the moment at the 200 MA in the 5-minute chart. Yesterday's trading session was very, very choppy, as can be seen here, with the futures market moving higher. It pulled back, and then we moved higher again once the cash market opened. Prices then sold off, offering a nice short to the downside, which was great. We then had a retest of the lows, but divergence occurring in the market can be seen here. The momentum higher than the previous low here, so that means that the market was starting to show some support. Prices then moved higher back to the close, then back down, and where did it stop? The low. Before the market then rallied up 50 points, 60 points, 70 points before it then pulled back. In the afternoon, this was purely by luck, no judgment. I happened to be in the down move of this when Putin made his comments about the use of nuclear weapons. I got it in on the smaller time frame in a 1-minute chart, and the market just continued lower. I got out as we went through the low because I knew there was a good chance they were going to bring it back, and they certainly did. And then in the evening, the market managed to make its way back with the Dow there. So let's have a quick look at yesterday's trades and the week as a whole. So yesterday's profit is 56621. There's no profit factor because it was 100% winners yesterday, 10 out of 10. And that was helped, of course, by the trade, the Putin trade, which looked like this. It was 161 there. I just happened to be short at the time when that move occurred. And like I say, I got out at the low because I know how powerful the low is when they're trying to bring the market back to the upside. So yeah, good day for yesterday. Let's just go back. And for the week so far, 1,6091. On the week is 88.12, and the profit factor is 27.44. So yeah, if despite the market being sideways yesterday and a spot of luck of actually being short before Putin made that statement, but then you had to be lively to actually take the profit because they soon brought the market back. So in the S&P, same thing. We've got demand there. We've got the market moving up overnight as well. This is at an 89% retracement level from there, projected back though, and also sitting on the 50 bar moving average as well, which is a very powerful average. There you can see also there's the pullback there, you can see that, and the market trading up to the DP at the moment and the 50 EMA. In the FTSE 100, we've also got the market coming back overnight, sideways yesterday. No demand in the FTSE though, compared to the others, but then it's been the stronger market. You can see it's a nice uniform trend to the upside there for this market, and in the 30-minute chart overnight gapping down slightly with the rest of the markets, but finding the buying coming into the market and moving the market back up to the close, and the 50 EMA and the DP is in the crosshairs there as well. In the GBP JPY, you can see the market is being sideways for the last couple of days. That's because there's no Fed news this week to move the dollar. Despite that, though, we're still seeing about 70 to 80 points on the downside there, and a good move of 150 points on the upside yesterday overnight and yesterday morning session adding to it. The market sitting on the close, as can be seen here. And we've also got a bit of a move to the upside overnight there as well. In the pound, the market sitting on that 200 MA, holding there as well as the market's gapped up on the overnight market. Let's have a look at this. You can see yesterday we marched back to the upside, stopped at the 200 MA, went through the 200 MA, but then found resistance at the R1. Market brought back to the DP overnight. Nice sideways move sitting on this level with buying coming into the market to support, and now moving back towards the close and the 200 MA, and there's yesterday's high. If the market continues to break through all of the other resistances, that's where its target will be. And in the dollar, this up yesterday. Well, it was up initially, then it pulled back to the 5-bar moving average. If I just zoom in a bit, you'll see this where the market's got a bit of support there from the 5-bar, but a bit of weakness overnight for the US dollar. You can see this having broken the DP and the 50 EMA and the 20-bar, and now trying to find some support at the close. 200 MA there in the way, and the low of yesterday will be important because this was also the low of Tuesday as well. In the silver market, as the dollar came down, the silver moved to the upside, which you can see there. And the 30-minute chart of silver also moving up as well at the moment, heading back towards yesterday's high. The market's become quite strong, hasn't it? And seems to be ignoring the dollar. The same for gold. Also moving back to the upside there. 200 MA in the way in the daily chart. That needs to be taken out. Still below the $1,800, despite the fact we've been over this for a couple of days this week and the latter part of last week. And the 30-minute you can see there moving back to the upside, but not as strong as silver in the 30-minute chart, which is a lot closer to its previous day's high. And speaking of gold, just to make you aware, let me just show you this. Central banks are buying gold like it's gone out of fashion, and the last quarter was a record high for central banks buying gold. So the old relic is coming back into favour, as can be seen here. And also there was a report out yesterday on Zero Hedge also stating that already there is massive buying in quarter four for gold by central banks as well. Whether it's anything to do with the CBDCs, who knows, but there'll always be a place for gold, simple as that. Okay, that's it for this one, and as ever, thanks for watching. See you in the next one.